What's up, guys? Welcome back to the channel. In today's lesson, I'll be teaching you three proven liquidity strategies with an accurate entry technique. Okay, I'm going to give you three different liquidity setups, and I'm actually going to give you entry models which you will use to approach these setups. If you've watched our last lesson on entry and the updated one on liquidity, I believe it's going to help you understand every single thing I'm going to teach you in today's lesson. So if you've not watched them, I would advise you watch those lessons before watching this particular one today. Now, if you are new to the channel, consider subscribing to the channel. I'm Solomon Wisdom, and here is Born to Trade. Over here, we talk about smart money strategies that can actually help you boost your confidence as a trader and make money consistently from the financial markets. Let's jump straight into it. One of the liquidity strategies that can give you accurate results is your buy side and sell side liquidity pattern. If you know how to identify your external range liquidity, just like I explained last week, it can actually help you identify where price is likely going to move to. If you paid attention to some of the things I explained, let's do it quickly. Firstly, if you look at the current price, where is your buy side liquidity? This is your external range buy side liquidity. This is your external range sell side liquidity. This is your current external range sell side liquidity because this is your current price range. Zooming in right now, what I explained is that if price sweeps the low and gives you an entry pattern, this means that we're going to have a continuation to the upside. And if price sweeps the liquidity above this particular high, gives you an entry pattern, which is giving you a confirmation that the bears are entering the market. You can as well look to get your entry and then move to the opposite direction. Now, one of the confluence we have right now is that price is clearly bullish. So if price sweeps the low, we have high probability setup right here because it's possible that price is going to continue to the upside because the order flow in this case is clearly bullish. All we have to do is to play price forward and see. At this particular point, price sweeps the low, and what we can do is to drop to the lower time frame to look for entry. Let's drop to the 15 minutes time frame. Now, here on the 15 minutes time frame, what you can clearly see is that price takes the liquidity underneath this low. If you paid attention to the last lesson I dropped on entry, talking about updates on entry models, what I explained in that particular lesson is when you have a higher time frame key level where price already mitigates, or in this case, we're actually talking about liquidity. So in this case, price has now swept this liquidity. All we need is bullish intention to tell us, okay, that the bulls are entering this market and there is need to get involved. And how do we identify bullish intention? We identify this when we have a shift in market structure. Secondly, if the most recent supply zone fails, then this explains that the bulls are entering the markets. What we see right now is that price was actually able to close underneath this low. So since price closed underneath this low, what are you going to identify? If you want to identify where price is likely going to shift in structure, this is the highest point. If price breaks above this high, then it's a confirmed shift in market structure. And alternatively, based on the recent lesson, if price breaks above the most recent supply level, then this indicates that we have a shift in structure. And how can we get involved? We get involved when price comes to retest this level, which is what I call a breaker entry. Price breaking above a supply and retesting it in form of demand. Okay. When I dropped that lesson, one important thing I said is you should place your stop loss underneath the low if price actually breaks this high. This is the safest place you can place your stop loss. Now, what can you see? Price moves above the high, came back for a retest of the level. I hope you see price breaks the high, came back to retest. So this is your entry point. This particular high right here is your entry point, your stop loss underneath this low. This is time to place your profit targets. Where could be your first profit targets? This high right here is a very good profit target. This high, very good profit target. And if you try to zoom out, what else can you see? This is another high. This is a very good profit target. And some other people can decide to target this external range liquidity if price can actually get to it. Now, playing price forward. See, price came back a little more and start to react. So let's move to a higher time frame and see how price reacts. So back on the 2 hours time frame. Now, remember, this is our first target. These are second targets. And the standard range liquidity could equally be our third target if price gets to it. Now, price hits our first target, hits our second target. Can it get to the third one? Now, price came very close and we start seeing some retracements. But the truth is, price couldn't get to the third one. Instead, it reversed from that particular area. I actually know why price reacted from there and dropped. Why? We have a QML level right here. So it's important to understand almost all smart money concepts if you want to trade in the financial market. So the very first one we explain right here is a turtle soup pattern. This is actually a turtle soup pattern where price sweeps the liquidity underneath an old low, because this is actually an old low. Price takes liquidity underneath an old low and we have the continuation to the upside. I hope this makes sense to you. Let's see the second liquidity setup. The second liquidity setup is going to be the liquidity sweep setup. I know these setups looks like the same, but in this case, you'll be combining liquidity sweep with supply and demand. So this is the setup right here. When I was already making profit from it, this was the exact same setup when it was shared. Now, when I shared my result about this setup, I got a lot of questions about, four students asked why I chose this particular point of interest. And I think I answered only one of them, but I'm going to do a general explanation why explaining this particular pattern. So this is Euro NZD 2 hours time frame. Now, I'm going to teach you the second liquidity setup. Now, in this particular case, if you try to zoom out, you see that price is clearly bullish, pushing to the upside. Now, since price is bullish, what are you going to do? What you're going to do is to find your bullish trade opportunities. At this point, we had a shift in structure around this particular area. So having this shift in structure, this was actually why a lot of people was asking that particular question. But that's not all. The very first place I tried to trade from was a level around this particular area. We had a point of interest around here. And why did I choose this point of interest? I have my liquidity sweep pattern right here, around there, price sweeping low, old low. So if I try to maybe go back to my VIP community, I shared that particular trade opportunity there. And we had other confluence that made it a high probability trade opportunity. But in this case, this was a failed trade opportunity. This level failed to hold price. So since this level failed to hold price, what I did was keep calm and see how things developed. This particular setup, I think I shared it last week. Then this particular week, this was when I was able to spot this new trade opportunity. Yes, the order flow is clearly bullish. We have a shift in structure, which means we could have a possible downtrend. By this particular point, we have a realignment of price. That is what we call price realignment. This simply means price realigning with the overall order flow, okay? The overall structural flow. This was the low that swept liquidity, pulled back, price sweeps that particular low. And this is exactly what I've been teaching about the liquidity sweep pattern. Now, if you want to get involved using this pattern where price sweeps this old low, all you have to do is to what? Drop to the lower time frame and get involved. Very simple. Drop the lower time frame and get involved. But this is not actually what I want to teach. What I want to teach is how to use this liquidity sweep pattern. I've explained it a lot of time on this particular channel, but it's a proven strategy. I said I'm going to be teaching you 3 proven liquidity setups that is going to make you profitable in the market. So it's a proven one. It's my favorite, and that's why I'm teaching it again. So not just price sweeping this low, we have a shift in structure. So this shift right here means realignment of price, right? This particular pair is clearly bullish. If I try to zoom out, you see price has been bullish for a very long time. See, so this is a very good confluence that, okay, we can actually continue with the uptrend. Now, what is the confluence am I seeing right here? Price sweeping the low, a shift in structure. Now, all I did was very simple. Just marked the point of interest, marking what's my demand level in this case. So this is liquidity sweep combined with demand level. We also have other liquidity confluence. Where do we have this confluence? At this particular point, this is liquidity point. If you want to trade supply and demand one important thing is making sure that price builds liquidity above your points of interest. So this was a liquidity point. I can actually call it an inducement area because I just have one retest for now. But when I start seeing price building more liquidity above there, I can call it a liquidity pool. Now you see price comes, sweeps it, and now it starts to build more liquidity. So at this particular point, you see price builds more liquidity above our points of interest, which makes here a very large liquidity pool. Now, when we had this liquidity pool, see price comes back to mitigate our points of interest. I hope you see. Now, what do we have? Liquidity sweep, change in direction of the markets, which aligns with the overall order flow. Price builds more liquidity above our points of interest. Mitigation of our zone. Now, if you want to get involved using entry method, can drop to the lower time frame now. So let's go to the 15 minutes time frame. Now, here's the 15 minutes time frame, and if I try to zoom out, this is price mitigating the level. So here's the 15 minutes time frame, and we can decide to look for entry. Here is the low that was taken, price breaks this low, and if price breaks this high, that is the shift in structure. Secondly, if you want to use the breaker entry, this is the most recent supply level, and if price takes this supply level, we're going to wait for the retest and we're going to go higher. And if you are getting involved from that level, where should you place your stop loss? Your stop loss should be placed underneath this low, plain price forward. So you see, in this case, price didn't break there. Instead, it mitigates this level and is dropping. And one important thing I said is if price doesn't break that high, which is if price doesn't break above the supply level, making it a failed level, there is no need trying to trade. If you're actually entering with a confirmation entry, it means that price is still bearish on the lower time frame. Refer back to that lesson. But finally, price breaks the high. Okay, this is where price breaks the high. So since price finally breaks the high, you can get involved from the retest, and you see we already have the retest. Now, there was something else I said about a flip entry. If you want to use a flip entry, you'll be getting involved from this level. Just try to learn all the entry methods. If you want a flip entry, this is your entry point. And if you want a breaker entry, this is your breaker entry right here. Now, if you want your normal entry confirmation, this lowest point is where you have your lower time frame entry confirmation, which is our confirmation entry. So these are just the different entry methods. But the most important thing is no matter the particular point you try to get involved, make sure that your stop loss is underneath this particular low. That's just the thing. Because when this is going to be a failed setup is when price breaks this low. If price is here to break the low, it still means that price is bullish in this case. Now price starts to react, and you see price now came very close to the stop loss, which is why I said you should place your stop loss underneath this low. And if you try to play price forward and get some of our targets, where are possible targets? These high rights here could be our first targets, and the external range liquidity could be our second target. So let's go to the higher time frame and play price forward. So playing price forward right now, price starts to react and it hits our profit target, and this is where price is currently. So this was actually a very good trade setup which offered good results in the market. And I know I've already explained why I chose this particular point of interest, and this is what we call a liquidity sweep entry. That is combining liquidity sweep with supply and demand. Now I'm going to teach you the last one, which is one of the oldest liquidity sweep pattern, which a lot of people know about. So let's go to that particular one. So this is the oldest liquidity setup, which every one of you know, which we call power of three, which is the AMD setup: accumulation, manipulation, and distribution. And this particular one has actually made me a lot of money in the financial markets. I can remember my early days trading smart money concepts. This was the setup which gives me the confidence. If I see this setup, I have confidence to trade it because it was my favorite then. It was actually my favorite. I used to trade AMD setup, which is the power of three setup. So let's see. If you want to trade AMD power of three, this particular one is a little bit different from the first one, which is the turtle soup, where I said price goes to sweep an old high or an old low. In this particular case, we usually see accumulation, okay? Price accumulating, and this is exactly what you can see over here. This is an accumulation right here. Now, trading this is very, very simple. This is actually one of the simplest smart money strategy. If price sweeps the high, then it means that we're going to move to the opposite direction, dropping lower. And if price sweeps the low, it means that we're going to continue higher. Now, let's see where price is going to sweep liquidity from first. Now, what can you see? Price moves underneath this low, which means that price now sweeps liquidity underneath the low. Now, currently, price is still bearish. So if price continues bearish, then there is no trade opportunity. The only time we're going to have a trade opportunity is when we see bullish intention. And this is exactly what I'm saying. We have a pullback. So since we have a pullback, dropping to the lower time frame to look for entry is actually going to be the best thing to do right now. So this is your lower time frame right here. You see, this is the accumulation. Price actually took time accumulating these orders right here. The liquidity at the low has been swept. How can you get involved right now? Remember the entry pattern I've been teaching, the recent entry pattern, where price has to shift in structure or breaks above a supply level because we are in a bearish movement. Price is trying to shift, so price has to break supply to be valid. If I try to zoom in right now, this is where price is going to take. If price takes this high, this is a valid market structure shift. Secondly, if price breaks above the supply level, this means that the order flow is shifting. But if price mitigates and drops, we are still in a bearish market. But let's press price forward and see. What can we clearly see? Price moves above the high, and now we're having a pullback. So have it in mind, if price fails to retest your zone, it's a missed trade opportunity, and there's nothing you can do about that. So all you have to do is to be patient, to wait for the retest. So this is one thing you need to note about entries. Sometimes you're going to miss trades. Price might miss retesting your points of interest. But let's see. Price starts to move away, and over here we have the retest of this level. So price coming back to retest this level means this is your entry level, your stop loss underneath the low. Now let's go to the maybe higher time frame, so this will play forward faster. Now this is price coming back to this level, retesting this level. Now we're going to anticipate that price is going to continue higher. Where could be a possible target? This is a good high. This is a good high as well. And the external range liquidity is actually a good high, but I don't place my target this way. I select my profit target based on risk to reward ratio. I can actually spot another thing right here. I hope you all can see this. Price equally swept an old low. I hope you can see that price sweeps an old low right here. So price sweeping an accumulation area, sweeping an old low, giving us an entry. This means that price could actually get to the external range liquidity. It's a very good confluence. I'm just saying this now. So let's press price forward and see. Okay, what I can spot right now is that we have another accumulation right here. Price accumulating more orders. See, price accumulating orders right here. See, these are equal lows. So this is another form of accumulation. Price will not always accumulate above the high and underneath the low. Sometimes it might just be equal lows, just like we see here, equal lows. And if price sweeps the equal lows, then it's a good one. Okay, so let's see. Boom, price shifts to equal lows, and we have that massive reaction to the upside, hitting our first profit targets and equally getting to the second profit targets. Now, price continues lower, and this is exactly what we see. Price came very close to the third target, which is this high. Price actually sweeps it and retreats. So if you want to get involved, you would have dropped the lower time frame, maybe get involved and ride this little reaction. Okay, let's continue to press price forward. Now price continues to move to the upside. You can see that. So this is a very good one, and I hope these three setups I shared right now is actually going to be helpful to you. My advice is this: don't trade them all, okay? Select one, or you might even select two, the ones that are very similar, and trade them. And before you start trading them, make sure you practice a lot, okay? So thanks very much for watching this particular lesson. If you're new to the channel, consider subscribing to the channel. Thanks once again and see you in the next lesson.